Hello trader, welcome to my channel. My name is AdeDavidson. I'm a trader, and right here on this channel, I share my knowledge, experiences, and document my journey into the forex market. If today is the first time of visiting my channel, do well to give this video a thumbs up, subscribe to the channel, and don't forget to tap the notification bell so I get notified every time I upload a video like this. Without much talk, without further ado, let's get right into it. Alright, welcome. So in this lesson, you will learn about market structure and some basic terms that is associated with it. Okay, so basic market structure, introduction to market structure and its terms. All right, so what exactly is market structure? Market structure is a technical analysis method or strategy data used to determine price direction in the forex market. Okay, this consists of various terms such as higher high, higher low, lower low, lower high, swing high, low, swing high, swing low, etc. and etc. So market structure is simply a technical analysis tool. Okay, data use this to determine where price might likely go or where price is coming from. Okay, data use this to determine where price is coming from in order to anticipate where it might likely go in the future or in future price action. All right, so let's look at some terms that are associated with market structure. So understanding some market structure terms. The first one we have here is a swing. So what exactly is a swing? A swing is the distance or difference between two price levels on the chart. Alright, so one thing I wanted to have at the back of the mind or to understand first is when we say price move in a specific direction, that is a trend in the forex market, it doesn't mean that price move on a straight line or on a vertical line. Okay, so price move in a zigzag formation like this. It moves in a zigzag formation like this. Okay, it's more like a wave. All right, this is how price move in the forex market. All right, it's more like a wave. It doesn't move in a specific direction. Price don't move on the chart like this. When they say price is going up, this is not what they mean. It doesn't go down like this too. Okay, all right, price don't move in this direction in the forex market. Neither does it just go like this or go like this. Okay, it moves in a zigzag formation or in a wave-like formation. Okay, do something like this, come back down again. So this is basically how a price moves in the forex market, and each of these zigzag formation is called a swing. Okay, which is this that we have right here. Okay, so whenever price move up, it creates something like this. Okay, and this move is called a swing. Okay, a swing. So whenever price do something like this, each of this move here is called a swing. All right, and that is what we have right here. This is what we have right here. So as for a bearish scenario, it's still the same thing. In a bearish scenario or in a selling environment, okay, price will keep going down. Okay, so when price keeps going down, it also moves in a wave like this. So each of these move here is called a swing. All right, and that is what we have right here. Hope you understand now. So this right here is a bullish move. This right here is a bullish swing, and this right here is a bearish swing. Hope you get the point now. So when price is in a bullish environment, like when price is bullish or in an uptrending environment, price will keep going up, and when price is bearish or in a downtrending market, price will keep going down. Okay, that's basically what a swing is all about. So the next time I want to look at is swing point. So what exactly is a swing point? A swing point is simply a price level where price reverse either for retracement or complete reversal. It is also referred to as the turning point of price. Okay, so a swing point is basically a point where price turns back. Okay, so when price keep is moving upward or in an uptrending market like this, at some point you will see it do something like this. It will come back down, then move up again, it will come back down, then move up again, it will come back down. Okay, each of these moves that is each of these turning points, okay, each of these turning points is what is called a swing point. All right, so each of these turning points is what is called a swing point. All right, so that is basically what a swing point simply means. Either when price is going up and it reverses back, that point where it reverses is called a swing point. Okay, or if price is going down and it reverses back to go to shoot up or to move to the upside, that point where it reverses and starts going up is called a swing point. Okay, so if price is going down like this and at some point it reverses back, okay, this point is called a swing point. This is what a swing point is called. All right, hope you get the point now. So a swing point is divided into two types, which are swing high and swing low. So these swing points now, they are divided into two types, and that is a swing high and a swing low, which brought us to our third term. Okay, so swing high and swing low, what exactly does this two mean? In a bullish trend, a swing high is simply the highest point price attained before retracement, while a swing low in a bullish trend is the lowest point price declines to after retracement. Okay, so remember I said a bullish swing is this move right here. Okay, this is how a swing point, a bullish swing rather, this is how it looks like. Okay, price will keep going up like this. This is an example of a bullish swing, right? So right there, a retracement is this move that is opposite the actual direction of price at that point in time. So for instance, this bullish trend here, this is the swing. Okay, and right there, this other move, okay, that is opposite the main direction or the swing, is what is called a retracement. Okay, so this guy right there is a retracement, and this guy up here is also a retracement. Hope you get the point now. So a swing guy rather, is the highest point price attained before retracement. So where is the highest point that price gets to before retracing? So this is the highest point that price gets to. Come on, is this not supposed to have a cleaner or something? Yeah, I think so. So this is the highest point that price attained before retracement. Okay, so that is what is called a swing high. And right there is lowest point. Okay, the lowest point price reaches or declines to after retracement. Remember, I said this is retracement, so this one is also retracement. So this is called a swing low. Hope you get the point now. Okay, so in a bullish market or in a bullish trend, a swing high is the highest point. A swing high is the highest point price attained before retracement, which is this high right there. The highest point that price attained before retracement. Okay, while a swing low in a bullish trend is the lowest point price declines to after retracement. This is retracement right there. So the lowest point that price gets to after that retracement is what is this low right there, and that is what is called a swing low. Okay, hope you understand that part now. Okay, so why for a bearish scenario, in a bearish trend, a swing high is the highest point price attained after retracement, while a swing low in a bearish trend is simply the lowest point price declines to before retracement. Remember I said a bearish swing is looks like this. Okay, that is when price is moving downward or price is going down. Okay, remember when price is going down like this, this is how a bearish swing looks like. Okay, so right here, a bearish swing is this guy in the middle right there. So this opposite move that we have right there, this opposite move that we have right there is called retracement. All right, this opposite move that we have right there is called a retracement. Okay, so let in a bearish trend, the highest point, a swing guy rather, is the highest point price attained after retracement. So after this is retracement, the highest point that price gets to is this place. So that is our swing high. Okay. Why is swing low in a bearish trend is simply the lowest point price declines to before retracement. Okay. So the lowest point price reaches. This is the lowest point that price reaches before this retracement. Okay. Before this retracement. So this is called swing low in a bearish trend. Okay. So that is basically what swing high and swing low is. The swing high in a bearish trend is the highest point that price attained. Sorry, is the highest point that price attained after retracement, while a swing low is the lowest point that price declines to before retracement. So that is all about that. The next one I want to look at is higher high. Oh, sorry, I think I missed something there. Note, a swing high and a swing low is usually denoted as SH and SL. Okay, I think right here. So this swing high, instead of spelling the whole thing, you can simply just write it or shorten it like this. Short write it like this or abbreviate the word like this as SH and SL. Alright, that is basically what the last part there is talking about. So let's look at the next one, which is higher high and higher low. So what is higher high and higher low in market structure? Higher high is formed when price creates a new high after displacement above the last or previous high. Okay, so right here, where is the highest point that price gets to? Where is the highest point that price gets to? Or let's say the last high. Okay, you can simply agree with me that this is the last high. This guy right here is the last high. Okay, so the moment price trade above this high to create a new high, okay, that is when we have a higher high. Okay, let me come again. So the last high, come on. So the last high right here is this high. Is this high, right? Okay. The moment price comes, let's assume price is somewhere around there. Okay. The moment price displays above this last high, the moment price displays above this last high to create a new high, then that is when we have a new higher, a new high that is above the previous high. Okay. So and that is called a higher high. Okay. And higher high is a new high price creates after it takes out previous high or last high in the first market chart or in the price chart. All right. So what is higher low? Why higher low is the lowest point price retraces or declines to before creating a new high. Okay. This low, you agree with me that this low is the last point that price created. This swing low right here is the last low that price created before it takes out this high, isn't it? So this low that price created right here, okay, is called higher low. Okay, the last low that price created or the lowest point price declines to before creating a new high. Okay, before creating this new high, that low is what is called higher low. All right, and higher low is the lowest point price retraces or declines to before creating a new high. All right, right here is our higher high, and right here is higher low. Okay, so that is basically all about that. And series of this series of higher high and higher low is what characterizes a bullish trend, and this is usually denoted as higher HH, which stands for higher high, and HL, which stands for higher low. Okay, so what this place is simply saying is series of these higher highs and higher low is what characterize a bullish trend. Okay, when this happens in the forex market, that means price is bullish. Okay, it means price is bullish. Okay, so this is a series of higher high and higher low is what characterize a bullish trend. Okay, that is all about so the next thing I want to look at is lower low and lower high. Lower low is formed when price creates a new low after displacement below the last or previous low. Okay, A lower low is created after price creates a new low. After price displays below the last low and creates a new low. Okay, so right here you agree with me that the lowest point right there is this low. Okay, so the moment price, let's assume price is somewhere around here. So the moment price displays below this low, to create a new low right there, then that is what we call a lower low. All right, let me come again. A lower low is the lowest point. Okay, a lower low is created after price takes out the previous or last low. Okay, so right there is the old low. The moment price takes out this low to create this new low, then this new low is called a lower low. Okay, while a lower high is the highest point price retraces to or attain before creating a new low. Okay, right here is a retracement. Okay, so the highest point price retraces to, which is this high right here, is what we call a lower high. All right, so this is a lower high, the highest point that price retraces to before creating this new low. Okay, is what we call a lower high. Hope you get that point. All right, so series of lower low and lower high is what characterizes a bearish trend, and it is usually denoted as lower low and lower high. All right, so right there, this is simply talking about. So series of price creating lower high rather, and lower low is what characterizes a bearish trend. Okay, so right here, come on. So right here is a lower high, and right here is lower low. Okay, series of these two is what characterizes a bearish trend. Okay, that means price is selling. Okay, price is in a downtrending market. All right, so that is that about that term. Okay, another term we need to look at is break of structure. So what is break of structure and what does it mean? So break of structure in a bullish trend occur when price takes out the last or previous high to create a new high. Okay, this is used to confirm the validity of higher low and continuation of the trend. Okay, so when price in a bullish trend, so when price displays above this last high, okay, when price displays above this last high, that simply means that price has broken structure. Okay, so what happened right there is what tag BOS or break of structure. Okay, hope you get the point now. So in a bullish trend, when price displays above the last high to create a new higher high, okay, to create a new high, that displacement above or that level where price broke out of is called a break of structure. All right, it's called a break of structure. All right, so this is simply used or signals to you as a trader that there's high chances that price will likely continue the bullish trend or will continue the trend that is in play at that particular period of time. Okay, so when you see a break of structure right there, you expect a little pullback or retracement back into this price level, which is the discount level, and then you expect this low to hold because you already have a break of structure that signals continuation of this bullish trend. Okay, and also this is used to validate the it is used to validate this higher low that we have right there. Okay, higher low serve more like a root. Okay, a root or a price level that causes this swing. Okay, that causes this swing. All right, so higher lows are more like are expected to be protected. Okay, higher lows are expected to be protected. So when we have a break or structure to the upside, we don't expect price to trade back down into this low again. Hope you get the point now. So you don't expect price to trade back down into this low again, except if price wants to change its direction, which you will get to learn more about as we proceed in this lesson. Okay, so a break of structure, it is used to confirm continuation of a trend and the validity of a higher low. All right, that is basically what break of structure mean in a bullish environment. Okay, let's check for a bearish environment. So a break of structure in a bearish trend occur when price takes out the last or previous low to create a new low. Okay, this is usually used to confirm the validity of lower high and continuation of the trend. Okay, it's same narrative with what I explained during the bullish scenario too. Okay, when price takes out this old low, right here, so what we have right there is break of structure. So this also signals continuation of the downward movement. Okay, so you expect a little pushback into this premium level, then you expect a sell-off from there. Okay, so this is simply used to confirm the continuation of the bearish trend and also the validity of a lower high. Sorry. So break of structure occur when price takes out the previous low to create a new low. All right, so note this is usually denoted as BOS. All right, this is usually denoted as BOS or BMS. So BOS stands for break of structure, or BMS, which stands for break of market structure. So whenever you see something like this, BMS or BOS, they both mean the same thing. Okay, you don't have to get confused. All right, so they both mean the same thing. BMS means break of market structure, and while BOS means break of structure, but they all mean the same thing. All right, so the next time we want to look at is market structure shift. All right, a bearish market structure shift occur when price displays below the last higher low of a bullish trend. Okay, at some point, let's say price is moving in an uptrending market like this. Then at some point, price wants to change the direction where it's going or where it's moving at that point in time. So what price will do is it will displace below this last higher low that we have right here. So when price do something like this, you expect a little pullback back into this high. Meanwhile, this high is expected to hold. Okay, price is not expected to trade back into this high again. So when this happens, the price stay back into this premium level and then displace to take out this last low to create a new lower low. Okay, that is what we call MSS, or market structure shift. Okay, so what happened right there is what is called market structure shift. Okay, when price displays below this, what happened right here is what is called bearish market structure shift. So this simply tells you that there is a shift in trend that is in play at that point in time. So if price is bullish before, then the moment this happens, then you should prepare your mind or anticipate price to want to change its direction from bullish to a bearish trend. Okay, so that is basically the functions of a market structure shift, and this is what it looks like. Price is in an uptrend before, there at some point it displaces below the last higher low. Okay, then you expect a little retracement back into this price level and then continuation of the bearish trend to create a new lower low. Okay, so this is basically what market structure shift is all about in a bearish environment. So let's look at market structure shift in the bullish environment. A bullish market structure shift occur when price displays above the last lower high of a bearish trend. Okay, so I want you to assume that price is currently in a bearish trend. Okay, price is going down. All right, at some point price displaces above the last lower high. So when this happens, this is called market structure shift. So that means the current trend at that point in time, which is the bearish trend at that point in time, has changes from bearish to bullish. So when this market structure shift happens, when price displays above the last lower high, then that signals to you as a trader that there is high chances that price is likely going to change its direction from bearish to bullish. So all you expect is for price to displace back into this low, okay, before it rallies to continue the bullish move. All right, so basically bullish market structure shift is when occur or happens when price takes out the last lower high. Okay, when price takes out the last lower high, that is when you have market structure shift. So this signals to you that price has ended the previous trend, which is the previous bearish trend, in order to start a new trend, which is a bullish trend. Okay, so that is basically what a bullish market structure shift is all about. Okay, so you have to note Market structure shifts indicate the end of the last or previous trend and signify the start or beginning of a new trend, and it is denoted as MSS. Okay, it can also be called change of character, which is denoted as CHOCH chock, or change in state of delivery, CISD or CSD. Okay, what is simply telling you is market structure shifts indicate the end of a trend and the start of a new one. Okay, a bullish market structure shift indicates the end of a bearish trend, a previous bearish trend, to start a new bullish trend, while a bearish market structure shift indicates the end of the previous bullish trend to start a new bearish trend. So that is basically what this place is simply talking about. And another thing that you have to keep in mind is you can see out there where people use the word change of character or CHOCH or CSD or CISD, okay, which is change in state of delivery. Whenever you see people use this, okay, it's all mean the same thing. They all mean the same thing with market structure shift. Okay, CSD means market structure shift is the same thing as market structure shift. Okay, it's just different tutors, different gurus with their all different name for the same concept. Okay, they are all the same thing. The concept market structure with CSD with chalk are all the same concept. Okay, they are all the same concept. What differentiates them all is the names that they call them. Okay, you can see someone called market structure shift CSD, you can see another person call it change of character or whatever, shake up. So this is basically what this person is talking about. So that is basically all I want to share with you in this video. So make sure you go into your chart to test this out. Look into your chart, mark out lower lows, lower highs for a bearish trend, and higher lows, higher highs for a bullish trend. Also, mark out bearish market structure shift and bullish market structure shift. So mark it out, share it with me in the comment section. And also, if you have any question or maybe you are confused about anything that you want me to buttress more on, just leave a comment in the comment section. I will do well to reply you and answer whichever question you have for me. And if this is somehow too much for you, like when you watch it the first time you didn't understand it so well, make sure you watch this video all over again. Watch it over and over time until you have or grasp every message I'm trying to pass out to you in this lesson. Okay, and that is all I want to share with you right here in this video. But before you leave, do well to give this video a thumbs up, subscribe to the channel, and don't forget to tap the notification bell so that you get notified every time I drop a video like this. Until next time, I wish you good luck, good day, and good trading.